So it happened. This isn't something that's terribly surprising, but in an election year like this, where it feels like we've had 45 different very dramatic events, this is just one more big bombshell to drop. Obviously, you've probably heard the news if you're clicking on this video, but Robert Kennedy has dropped out of the race as one of the three front running leading candidates, obviously, besides Harris or Trump, and now he is supporting Trump. And in this video, I'm going to talk about what does it mean? Why does it matter? As someone that's into Bitcoin, what should you think about this? What's the nuance with it? What should you be excited about? What should be your concerns with it? And ultimately, the thing that everyone wants to ask, everyone wants to know, what is this going to do to Bitcoin's price? What is this going to do to Bitcoin's future adoption and future appreciation potential? I think this event was a very, very big catalyst for the future appreciation of Bitcoin's price, especially in the next 5 years. I think things have accelerated a good little bit just from this announcement alone. So without further ado, let's get into talking about this and why I think it's really, really important. So again, what happened? Kennedy dropped out, and Kennedy is now supporting Trump. I was at Kennedy's presidential campaign announcement back in March or April of 2023. I was actually in Boston doing some work in a Bitcoin meetup and some friends up there. And so I actually had the opportunity to go to his announcement speech, and I've seen two speeches of his subsequently in person. The other two were at Bitcoin magazine conferences. And both times, Bobby Kennedy said very, very bullish things for Bitcoin and what he wants done with Bitcoin. And so what I think most people are missing in Bitcoin are saying this is not good for Bitcoin because, oh, Kennedy was the Bitcoin advocate. Kennedy was the Bitcoin candidate, and now he's dropped out. That means that it's bad for Bitcoin. Actually, no, I think actually for Bitcoin, it's actually quite good, I believe. And the reason why is the reason I tweeted right here, right? Some people, I think, are going to react to this and say it is bad for Bitcoin that Kennedy has dropped out and is now supporting Trump. In reality, I think it's actually a big deal for Bitcoin because Kennedy has been upgraded from a low odds winning candidate, others call a spoiler candidate, to now a high odds inside figure in the next administration. Obviously, the Trump administration is far more likely to be the next administration than Kennedy's ever was. And so essentially, the odds of somebody within the White House being a passionate Bitcoin advocate and Bitcoin enthusiast, in my opinion, have gone significantly up on the announcement of today instead of down. I think this has actually improved the odds that there will be Bitcoin policy from the executive branch of the United States of America in the near future. Now, some nuance, because I want to make this very clear with nuance ahead of time, because some people are going to still, even though I'm going to say this, comment down below and say that I blindly support everything that Donald Trump and Kennedy have said, done ever before in history. That's absolutely not true. There are things I strongly disagree with and condemn both of former President Trump as well as Kennedy. Okay, I'm strictly speaking to the Bitcoin components here. I would make that extremely clear because unfortunately it's not always clear. Okay, there was a very legitimate criticism to this statement I said, right? And it's a very accurate one, right? As said here, given RFK's interest, particularly with that of health, it's most likely that Trump is going to appoint Kennedy as some sort of cabinet member within the Trump administration and not necessarily something that overlaps with Bitcoin. And I fully understand and agree with the statement. The reason I think this is really important and the reason I think you should really care about this is to actually ask yourself to think about this, okay? The next administration of the United States, whichever administration is, the next administration of the United States is going to be in office, okay, 5 years from now. Okay, we have this election year, then we have 4 years. That's 2029. A lot is going to change in the world by 2029, okay? A lot is going to change. And even if your favorite politicians of choice, whether it's Kamala or Trump or whomever, like whatever the case, that's a lot of time for those politicians to learn about Bitcoin, to change their opinions about Bitcoin, right? Keep in mind, 18 months ago, 1.5 years ago, Robert Kennedy was not talking about Bitcoin in the same way he is today. 1.5 years ago, Donald Trump was against Bitcoin because he believed it was a threat to the US dollar. Now, we've had Kennedy make not one, but multiple, numerous various Bitcoin presentations. Kennedy has gone to 2 Bitcoin conferences consecutively. Kennedy has been on multiple Bitcoin podcasts. And likewise, Donald Trump has had over $25 million of Bitcoin and other digital tokens donated to his campaign. And he was the headline act at the most recent Bitcoin conference, right? My point is, a lot is going to change between now and 2029, okay? And again, don't miss the forest for the trees. Don't focus on what is being said and done today. focus on the trajectory and the direction of which things are headed, right? 2029, 5 years away, it's a long time, and it's a long time for someone within the next president's cabinet that does believe and is advocate for Bitcoin to begin converting other members of the next president's cabinet, if not the president or vice president themselves, right? And oh, by the way, we have to keep in mind during a bull market, right? In the 18 months, the price of Bitcoin is up approximately 130%. You have to ask yourself, what's going to happen in 2 years or 1 year or 3 years or whenever from now when Bitcoin goes even higher, both in percentage terms as well as in sentiment terms? Even though Bitcoin is up significantly in the last year and a half, actually, it's more than 130%. I believe. I think it was just last year. But my point is, even though Bitcoin has up multiples from where it was at the bottom in November of 2022, sentiment is still very low. Bitcoin sentiment, which just means online interest, in particular from retail people like you and myself, is still very, very low. It is far lower than what it was in 2021 and in 2020. In fact, it's still lower than what it was in 2017. Bitcoin price is about 10 times more expensive than it was in late 2018. Okay, it's over 10 times more expensive, way more than 10 times more expensive, even though sentiment is still about same levels, right? So my point is, not only do we have 5 years for the next administration to have orange ideas floating throughout the White House, but we have orange ideas floating about the White House while we are during perhaps Bitcoin's largest bull market. Yeah, right. And again, second order effects. And now there is another legit criticism that, Bitcoin may not be a top priority for these candidates. I get it. I understand, right? I get it. But what I encourage you watching and think about is not in absolutes. Don't think in absolutes. Think in probabilities. Okay. What is the probability of a given outcome? And what is the consequence of that given outcome, right? My point is the potential consequence of the president, Federal Reserve Chair, or other high-ranking members of the U.S. government embracing Bitcoin on a national strategic level, that the consequences of that are so exceedingly high that a tiny, minute percentage change in probability has massive implications on the probability, right? Going from a 1% to a 2% change of winning, let's say, $1 million, right? That's a much bigger deal than going from a 10% to a 30% change of winning $100, right? When you have consequences that are 100 times larger, that means that you can have a percentage move that's 100 times smaller, and it can be equally as large of a deal, right? And that is the critical point I'm trying to make here, right? It's not that we should blindly support and, say, oh, well, maybe they'll fall short on those promises. Maybe they won't have anything to do with Bitcoin in the next 5 years. Okay. There's a 90% chance maybe they won't do anything with Bitcoin in the next 5 years, right? Maybe they'll start promoting some garbage token president coins that they start pumping out, whatever, right? Like all those things are entirely possible. But let's think in terms of probabilities. Okay. The unification of Kennedy and Trump on a ticket means two things. Number one, the odds of Trump's winning this upcoming election have just increased, number one. And number two, the odds of Trump winning in that election not only have gone up, but the odds of multiple passionate Bitcoin people within that administration at some point in the next 5 years have also gone up significantly, right? And again, for those that are going to critique me, I would like to remind and emphasize that at the Bitcoin conference where both Trump and Kennedy were, this was my interview with CNN. Okay, and this was the concluding line from that interview. Okay, and this is, I read myself in quote, I think there was a good bit of skepticism that Bitcoin people have. I think that's reasonable. Ultimately, people are in Bitcoin because they don't trust politicians, right? Okay, my entire interview with CNN, I was making it extremely clear that Bitcoiners do not trust politicians. Okay, the question is why? This is why. This is the U.S. debt clock. The current national debt of the United States is over $35 trillion. The current unfunded liabilities of the United States, if I can even find it here in this sea of terrifying numbers. Give me 1 second. I don't even see where it is anymore. Oh my goodness. Let me try to find it. I moved it around a bit. It's over $200 trillion. I'm having trouble seeing it here. My internet, I think, is having a little bit of problem. But if we go back to when Donald Trump first entered the political scene here, if we go back, the national debt of the United States was not even $21 trillion. Okay, I want to really, really emphasize that here. Okay. You can be supportive of politicians embracing Bitcoin while at the same time admit and recognize that they are not the solution to political currency. Okay, let me emphasize this again. We went from 21 trillion to 35 trillion from 2016 to 2024. That's 8 years. Okay. An increase of 16 trillion on top of 21 trillion. That is a huge, monumental addition in debt, right? That is not, that is a huge percentage move, right? We have almost doubled our national debt in the course of 8 years, right? And so that is a legitimate question you have to ask yourself. Where are we going to be 8 years from now, right? 8 years from now is the year 2032. Is it reasonable to say the national debt of the United States is going to be $60 trillion and that the unfunded liabilities of the United States are going to be over $400 trillion? I think that's entirely reasonable based on history, right? And not just the last 8 years of history, but the last 200 years of history of the debasement of the US dollar, right? When the United States purchased Alaska, it was $7.5 million. Okay. There are hundreds of people living in Alaska now that have personal net worths way over $7 million, right? Okay. The entire net worth of Alaska at one point in American history was $7.5 million. And now the national debt of the entire country is in the tens of trillions, right? So in the same way that the national debt of the United States has gone from tens of millions to hundreds of millions to billions, tens of billions, hundreds of billions, trillions, tens of trillions, I'm telling you, now we are going to hundreds of trillions, and soon enough, we will be denominating our national debt in quadrillions. If you don't believe me, or you think I'm being pessimistic, believe me, I'm being conservative and I'm being consistent with the last 2.5 centuries of U.S. debasement and debt. Now, if we zoom in a little bit to the last century or so, we see a big problem. This chart you're looking at here is the federal funds effective rate by the Federal Reserve, right, posted by them. And now what you see is that interest rates rose significantly from the 1950s up to the 1980s. And then in the beginning 1980s, down towards 2022, 2023, interest rates did nothing but fall, okay? They have fallen significantly over the course of the last 50 years, right? Now, what does this mean? I'm going to try to explain this as simply as I can. What this means is that we have had a significant bull market in bonds. When bond yields go down, when bond interest rates go down, as you see clearly in this chart they have, that means that you have bond prices going up. People are willing to pay more money for a smaller yield, and they're inversely correlated, right? And so that, unfortunately, has a big problem for the United States. Because if you'll notice by that chart, we are close to the bottom. We can't really lower rates much more unless we go negative, right? Since 2008, the 2008 great financial crisis, we have been basically at zero, okay? And this delusion we have of keeping interest rates as high as we are currently keeping them, where annual interest expense is exceeding the U.S. military, is not sustainable. Everybody knows it's not sustainable. Everybody knows at some point we are either going to have yield curve control or cut rates. We know it's not sustainable. And the reason why is because there was not enough demand for bonds. We can't force interest rates down anymore. There's not enough demand for America's debt. The obligations of the United States, since they're in the hundreds of trillions of dollars, we literally cannot pay it back. And the only way we could dream and have a hope of paying it back is by issuing more debt to then fund that. But again, the problem is that if nobody is willing to buy the debt, what happens? You have a feedback loop. You have debt. You need more debt to service the debt, but nobody wants to buy your debt because the debt's not valuable enough for them to have an interest in buying it to service the debt. So that means there's a lower interest for the debt, right? It's a feedback loop. It continues, right? We see this when empires rise, when they fall. When empires are on the trajectory upwards, people are more and more and more willing to invest in that military or in that regime. When empires are cannibalizing their own debt, when empires are taking future gains and spending them today to buy the next election from their voter base, this is exactly what you see. Why does nobody want America's debt? Because nobody wants America's debt, and the less people want America's debt, the less people want it, right? It's a feedback loop. And unfortunately, that's what we're seeing with bonds. And so then we have a very interesting question. What's the solution? America has a lot of debt. America doesn't have enough tax receipts. America doesn't have enough assets on its balance sheet. It's not a good situation. And so what we're seeing some politicians do is begin talking about taxing unrealized capital gains. We've seen this recently from the Kamala Harris campaign, as well as other people on the left side of the political spectrum, people talking about having significant taxes on the rich, quote unquote. The problem is that when you're taxing unrealized capital gains, you have an increased incentive to escalate and heighten inflation. And unfortunately, what that means is if you force property taxes and capital gains taxes to skyrocket and you force inflation to go up, really you're not creating any new wealth. You're just continuing to confiscate the current existing amount of wealth exponentially more until more people leave the US and you escalate the problem in a downward spiral. So, what is the solution? Well, if you were in charge, you would have a couple solutions. One solution is you can hyperinflate. Let's just hyperinflate the dollar. Let's just keep printing, right? We can't meet our debt obligations. Let's just print the money. We can't meet our interest expense. Let's just print the money, right? We have an infinite money printer. We have a Navy. We have an Army. We have nuclear bombs. Who's going to question us? Let's just keep printing money to pay everybody back. We will guarantee the bonds. We will guarantee the debt in nominal terms because inherently we can't guarantee it in real terms. We will never default on you in nominal price terms because we always must default you on real terms. But the more investors internalize this and understand this, the less they want your investment, your debt, the less they want it, the more the price falls, the greater your need to escalate this issue. This is how hyperinflations have happened in the past. So that's one option. Basically, you'll keep issuing currency until nobody else wants it. The other option is you can default and say this debt is now worthless. Okay, the problem there too, obviously, is that you don't want to default. Why? Because other nations and other central banks and millions of investors around the world and the world's largest corporations all hold US debt. So if you go the hyperinflation route, you're probably going to have major conflict economically that, if left unchecked, will escalate into kinetic war, which means death. Likewise, if you have defaults, that again means significant economic conflict, which probably means that at some point it is going to spill over and you are going to have death, right? This is the exact problem when you have any society that has way too much liabilities for its equity. Those are your only options. Dilute the paper in option A, dilute the paper in option B, and ultimately, either way, there is no real plan. However, we have a new option. We have option C. This is what I'm going to talk about here, right? So this is the fundamental problem. America has way too many liabilities, way too much debt. We have been artificially pumping the prices of our bonds by artificially forcing interest rates to go down for over 45 years. And unfortunately, we can't kick the can much further, right? Because every time we double the value of an investment, the market cap of it goes up significantly. And so there's another option. We could do the Michael Saylor strategy. We could print money to buy Bitcoin, borrow money to buy Bitcoin. Now, a lot of people say that's crazy. That doesn't make sense. And a lot of people don't understand how on earth is Michael Saylor able to, again, just a couple weeks ago, announce yet another $2 billion raise to buy more Bitcoin. Where on earth is Michael Saylor getting this money? How on earth is MicroStrategy getting this money? How on earth could they buy more Bitcoin? Haven't they already sold a bunch of shares? Haven't they already raised a bunch of debt? How on earth could they justify it? Well, here's the problem. This is an inherently unsustainable strategy. If the underlying asset had a supply that could increase. Let's talk about the 2008 housing crash real quick as a quick side note. The problem with the housing crash wasn't the houses. No, actually, no, it wasn't the debt. Sorry, it wasn't the debt. Most people think it was the houses. Oh, house values went down. That was right. The problem was not the debt. The problem was we built more houses. Okay, the entire bubble of the housing market that we created in 2004, 5, 6, and 7, that entire bubble could have been sustained if humans did not have the ability to build more houses. But here's the problem. The more debt you raise to buy houses, the greater the value you assign to those houses, the more valuable they are, the greater the incentive for other people in the free market to build more houses. And when those houses are built, you have more supply, meaning the same amount of demand. That means inherently the prices of those houses go down. You cannot borrow money to buy houses forever and have the prices of the houses go up forever without the debt being called at some point. That is not possible when you have an asset that does not have a fixed supply. This is the problem with gold, as another example. America has gold, which is an asset. America has liabilities, many more liabilities. And so if you're in charge of America, and I were to say to you, Mr. President or Mr. Secretary or Mr. whomever, chairman, whatever, whomever you are in the government, You have these options. You could hyperinflate your paper currency, number one. Number two, you could default. We've already talked about those options. Those aren't good. You want to avoid those at all costs. The treasury market cannot fail. It cannot freeze. Keep it going, right? That is not an option. This other option, though, Mr. President, is we could just buy gold at any price, and we will issue more debt. We will issue more paper currency at any price to buy more gold, and therefore force the price of gold to go up. And if other people around the world also believe that we're going to keep buying gold, and we don't care what the price of gold is, we will keep buying forever, no matter the spot price, print more money, buy gold, borrow more bonds, create more issue more bonds, which is our token, buy more gold, right? Basically, Mr. President, we could force the value of gold up and to basically cover those liabilities, right? If you're underwater mortgage on your house, well, if you could just, okay, yeah, you could say we could default on the mortgage, but if I gave you a button that you could just increase the value of your house to then cover the loan, well, then all of a sudden that starts to make sense. And so, again, this is the government example with gold. And so the question is, if this is an easy button for the government to basically bail themselves out of this impending debt problem, why don't they do it? Right? Solve it. Borrow the bonds, print the money, buy the gold. Why don't we do it? Again, it's because gold does not have a finite supply. You can mine more gold. You can produce more gold. In fact, I don't have the chart in front of me, unfortunately, but if you track the price of gold over the last few decades, as well as destruction of the Amazon rainforest and other rainforests around the world, you see a very clear correlation. Okay, gold mining production skyrockets in years that gold price goes up, and then it tends to decline in years where gold's price declines. Okay, this is exactly what happens. Mr. President, actually, we can't print more money to buy more gold, because the problem is that if we start doing that and we start forcing the value of gold up, the Russians might start mining gold. Other countries might start mining gold. China might start mining gold. We can mine more gold. Basically, we are suiciding the value of our paper. We are diluting our paper, which is a huge potential downside risk. It's an intangible risk that we don't want to take unless we are absolutely confident that its benefit is going to be worth it to us. Okay, and with gold, we cannot be sure that benefit is worth it to us, right? Because there is the risk somebody else makes a bunch of gold and causes us to have problems, right? Causes the value of gold to fall, in which case now we have exceedingly more debt than we did before, and gold has been dumped in the market, right? And we see this in reality, right? Diamond companies, what do? They hoard massive stashes and warehouses of diamonds. Why? Because by hoarding the diamonds, they can artificially force the value of diamonds out that we wear on our wedding rings or whatever. And that means that their treasury, their strategic reserve of diamonds, and their company vaults get forced up in value, right? And now, all of this is what I'm describing is what we see with Michael Saylor. This is the Michael Saylor strategy. This is why you should be paying attention to Michael Saylor. And this is why, of all the billionaires, Michael Saylor is the one that the most Bitcoiners listen to, the most Bitcoiners pay attention to, and I think is the billionaire that the most corporations and nation states are going to begin to copy. As Michael Saylor said on one of his podcasts a couple years ago, let me see if I get this right. Michael Saylor's quote was, "Take all of your money, buy Bitcoin, take all of your time, figure out how to borrow more money to buy more Bitcoin, then take all of your time to figure out what you can sell to buy Bitcoin. And if you absolutely love the thing and you don't want to sell it, mortgage your house and buy Bitcoin. Or if you have a company that you have for 30 years and you don't want to part with it, mortgage it, refinance it, take the proceeds, and convert it to Bitcoin," right? That's the quote that Saylor was talking about. What is he saying there? He's saying, take the weak asset and buy the strong asset. Unfortunately, in the great financial crisis, housing was a stronger asset than the debt. And so people made a lot of debt to buy the houses, but then the houses got weaker because we diluted their supply. And with the gold example on the nation state level, gold is a much stronger asset than bonds. It's a much stronger asset than political currency. And so if the government were to start issuing those things to buy the gold and force the value of gold up, that works for a period of time, again, until you increase the supply of gold. And so the reason Michael Saylor is brilliant and the reason this Michael strategy is working is because you can't make more Bitcoin. It's like the housing bubble where you can't make any more houses. It's like a massive gold rally where you can't make any gold. And suddenly the light bulb goes off in your head of, wait a second, if they just keep buying more people can't make more and dump on them and force it to go down. Wait a second. All of a sudden, it does make sense to take over your time and buy Bitcoin and borrow more money to buy more Bitcoin, right? And so, what on earth am I talking about with this in relation to the nation states? It is exactly this here. This is the strategy. MicroStrategies, and this is a 4-step flywheel here. MicroStrategies company value increases, right? It's a company that has cash flows, expenses, and turns a profit, right? What that means is that MicroStrategy stock price goes up. As the stock price goes up, the company issues more shares. It issues their own paper to get cash, and it takes that cash and it buys Bitcoin. So instead of on its treasury balance sheet, instead of paper, it is actually holding the hard asset, right? This is like the diamond company example I gave before, right? If you are a diamond company, you don't want to be holding pieces of paper in your warehouses. You want to be holding as many diamonds in your company as possible, right? Now, unfortunately, the problem with diamonds is that many of them are blood diamonds. The problem with gold is that you have to destroy land, turn over dirt, force species to go extinct to get gold out of the ground, right? But the beauty with Bitcoin is that because it's digital, it doesn't rely on violence. It doesn't rely on blood diamonds or cutting down trees to get it out of the earth, right? And all the electricity that it uses, or the vast majority of it at least, was stranded energy that was going to be wasted anyway, that was going to be siphoned off into the atmosphere otherwise anyway, right? And so this is the beauty of Bitcoin. We get all the benefits of an absolutely fixed supply commodity without all the downsides of the destruction of other analog things in this world to create said commodity, right? And so what this means with this flywheel here is potentially at some point, some person in charge of a major country is going to figure this out. I was shocked and flabbergasted when Kennedy at the Bitcoin conference, just here barely a month ago in 2024, seems to fully understand it. And this is why this unification of the Kennedy-Trump ticket, in my opinion, is a really big deal. I think Kennedy has a really good chance of understanding this. He seems to have understood it in words. Of course, when a politician promises something and they actually get to office, things tend to change, right? Donald Trump fell through on many, many of his promises when he got into office. It's entirely possible he could falter again, as well as Kennedy or any other politician, and including myself, right? Any human could not follow through on the promises. But I think it's really interesting to think about. Kennedy wants the United States of America to adopt this flywheel. Kennedy wants Michael Saylor to be Treasury Secretary of the United States. Kennedy wants America to buy 550 Bitcoin a day, every day, for 20 years until America has amassed a stockpile of 4 million Bitcoin. Probably I have to delve in a little bit of what that would mean for Bitcoin price, but the long story short is that if you have 1.7 million Bitcoin left on exchanges that are all being chased by 70 million millionaires, 3,000 billionaires, 330 million different corporations, another 5.3 billion people. Many of them are the working class, and many of them have six figures willing to invest. Oh, and another 200 nations and corporations that all have their own various political currencies and their own various debt markets that all themselves will be willing to dump more bonds and dump more political currency for Bitcoin. You have all of them vying for 1.7 million Bitcoin left on exchanges, and all of a sudden you have America coming in and wanting to just buy 4 million coins. You can start to see why price is going up. The math simply does not make sense. There simply are not enough coins if that were to happen. And so therefore, the only possible outcome to happen is for the US government to force Bitcoin price to go up. And again, this is in America's self-interest, right? Let's take the Michael Saylor example again, right? In 2020, his company was going to go bankrupt. It was going to fall. He was going to have to sell it and lose billions of dollars. Why? The answer why is because he was holding billions of dollars of cash on his balance sheet, the company MicroStrategy. His company was failing. The paper was not worth anything. Again, a feedback loop, right? Why don't people want to buy his stock? Why is his stock price going down? Because he's holding a lot of cash. Well, why is that bad? Because the cash is depreciating in value. The more the cash depreciates, the less people want the stock, the less people want the stock, the less people want the stock, and the less cash they're able to raise, they're able to hold, because the less equity they have in their stock, that means that the less cash they're able to have and save, right? It's a feedback loop downwards, right? And so the problem that Michael Saylor then thought the solution to was instead of just having paper that's trending to zero anyways, why don't we just convert that paper into an asset that doesn't trend to zero, and actually the asset that trends up against this paper forever, right? And so when a government realizes this, whether it's Kennedy or Trump at some point in the next 5 years, if they get elected, or it's somebody else, my point is, don't think in absolutes, think in probabilities. The probability of this happening has gone up, in my humble opinion, significantly with the unification of the Trump-Kennedy ticket. Okay, here's an excellent post by one of my fellow Michael Saylor and MicroStrategy fanboys, talking about the bondholders of MicroStrategy, right? And hopefully this will help you better understand. Okay, why is it that Michael Saylor is able to raise so much money to buy Bitcoin? It's because he has bondholders. He has convertible debt bondholders for his corporation, MicroStrategy, and they're thrilled. They're making money. Some of the bondholders for MicroStrategy are up 200, 300, 350%. Okay, one of the best performing bonds in the entire market, right? Okay, and that's why Michael Saylor and MicroStrategy, in my opinion, are really, really, really ahead of the curve. They've been ahead of the curve for 4 years, and finally they're starting to be recognized. Okay, institutional investors who can't buy the Bitcoin ETF or Bitcoin itself are very excited to be dumping significant amounts of money into these convertible bonds, these convertible notes for MicroStrategy, right? They get a call option on the price of Bitcoin plus interest, right? Let me explain tangibly what this means for the US government down the line, right? And again, this is probably a long ways away. However, the Trump-Kennedy thing, maybe it's not as long a ways as we think, right? Let me give you a scenario. You're an investor. I offer you an American bond, a 10-year note. You'll get whatever, 4% interest over the course of the next 10 years, guaranteed by the full faith and credit of the United States government, right? And here's another option. We're going to offer you some sort of structured product. 80% of the note will be U.S. Treasury bonds, and the other 20% will be funds that the U.S. government will then use to purchase and acquire Bitcoin. Now, all of a sudden, that's interesting because it's a principal protected note. Your downside is covered. It's still guaranteed by the full faith of the US government. You're still required to hold bonds for your clients or for your hedge fund or for your whatever you have, right? But now you have the upside of potentially a portion of that fund having Bitcoin upside, right? It's literally an obvious move, right? Why would I have 100% of my money go to you, right? Just to have the bonds when instead I could have a principal protected note and some sort of product like that, where it's a Bitcoin bond blended product where both are structured in the US government. And why does the US government want it, right? Not only is it in the incentive of the investor to take that note or to buy that note from the US government, not only that, but then on the other hand, why does the US government want it? Because they need demand for bonds. That's the whole point I'm making. Why are we having to skyrocket interest rates? Why is there all this stuff happening with Japan and all these, like, why is it that things feel a bit amiss, right? It's because demand for bonds is in dire, dire shape. But all of a sudden, if you find a way to keep the bond market Ponzi going, if you find a way to keep and stimulate demand for bonds that are having a lower and lower interest from investors because the yields are so astronomically low, so ridiculous that they have been below 1% for almost a decade until the last couple of years here, right? It is in the best interest of the US government to have these principal protected notes and convertible notes with Bitcoin and bonds in the same way Michael Saylor and MicroStrategy does it, right? Why would you buy the bond, or why would you buy the convertible note of some other corporation where you don't have the potential Bitcoin upside? Why would you do that for your, 1 to 2% yield when instead you could just do it with MicroStrategy, and heck, maybe you'll get that upside with this investment too, but your downside is still covered and it is still a product that you're able to buy, right? This is exactly how Michael Saylor has been able to buy so much Bitcoin. This is exactly how and why he has been able to raise so much debt to buy Bitcoin, why he's consistently able to raise more and more and more, right? See, this is the flywheel. This is the feedback loop, okay? The more people that want this, the more interest there is, okay? It allows MicroStrategy stock price to go up, okay? Share price for Michael Saylor's corporation goes up. Okay, what happens when it goes up? Then there's a big premium because the value of MicroStrategy stock is outpacing the returns of Bitcoin. And what that means is that Michael Saylor and the company can then dilute shares more, print more shares, dump more shares on the market, and more people are willing to buy it, right? And as Michael Saylor and others have said, when the duck quacks, feed the ducks, right? And so this is my point. Think of MicroStrategy as akin to the US government in this case. The US government, we need to pump our stock price. Why do we need to pump our stock price? We need to pump the asset side of our assets to liabilities ratio here because we need to issue more debt because we have a big, big debt problem, okay? Medicare is going to start becoming insolvent in 2026. Social Security is projected to start becoming insolvent in the early 2030s, right? We have major, major, major expenses coming ahead. We have the need for a massive ballooning of debt. And our two potential paths ahead are just explode the liabilities to the moon without getting more assets, or somehow find some asset we could acquire, put on our balance sheet, and force the price up as fast as possible to then close that gap, right? Because again, it doesn't matter how big the balance sheet is. Investors only buy a given balance sheet based on the value of it, right? If you have a company worth $1 million and a company worth $1 billion, literally worth 1,000 times more, okay, the company with $1 billion, they have $1 billion of equity, $1 billion of debt. That is still a worse buy than the $1 million company that has everything of equity, right? And so even if the US government over the course of the next 20 years or so increases its debt by a factor of threefold, heck, if we increase our assets by a factor of tenfold or 20-fold, actually, we're still better off in 20 years than we are now, right? At least from the government's perspective, right? And so this is my point, and this is why I believe it is an asymmetric bet. It is an asymmetric probability. At some point, the US government is, number one, going to understand this, and number two, they're going to get the guts to actually execute it. Because again, this is not something you can do flippantly, right? Printing more money, diluting your bonds, diluting the supply of your bonds, right? Adding more bonds to the market, exploding the number of bonds in the market, exploding the amount of political currency you're issuing just to acquire an asset. That is a big, bold, risky move, and you have to be sure, absolutely sure it works. Okay, and this is why Michael Saylor conviction is so awe-inspiring for Bitcoiners, right? Is that he was absolutely sure it would work. As he has said before, he saw the bridge, he went to stand on the bridge, he's standing on the bridge, and it's not broken. He has survived, right? And so I think that this Trump Kennedy announcement really could potentially usher in this Overton window and this shift of thinking, so that at some point in the next 5 years, maybe this will start to be understood. Now, at the time of recording, Bitcoin's 200 weekly moving average is over $38,000. Okay, this is a post that Adam Back made recently. Adam Back, for those of you who don't know, Adam Back was the guy who invented proof of work itself. He is the only human being mentioned within the Bitcoin white paper. Adam, it was a pleasure to meet you in Prague, and it's awesome to see you're following me out. But my point in bringing up this chart is to show you where we are now, right? Zoom out, ignore the short-term volatility. I know Bitcoin crashed by about 20% a couple weeks ago, but Bitcoin's up about 10% in the last week or so here. Now, okay, and this purple line, this dark purple line, that is the price you should care about if you were in Bitcoin for the long term. Zoom out and ignore the short-term volatility. Look at the purple line. The purple line does nothing but go up. It was going up when Bitcoin was 6 cents. It was going up when Bitcoin was $60. And it was going up when Bitcoin was $10,000. And now that Bitcoin is over $60,000 yet again, it continues to go up, okay? And this 200 weekly moving average of $38,000, the Bitcoin price, even with volatility, rarely goes below that price, right? So it is extremely, in fact, in my opinion, exceedingly unlikely that Bitcoin's price will go significantly below $38,000 ever again. It's probably only going to continue up from here. A year from now, maybe that number will be at 50K or so. Of course, that's only a 25% move up or so. So my point is zoom out for the long term and understand that the foundation is being set. We have the price foundation. We have the politicians starting to understand the importance of Bitcoin and the importance of winning voters over it, right? Now, unfortunately, a lot of people are focused on really short-term Bitcoin price volatility, as this person was a week or two ago, right? Again, when Bitcoin crashed by about 20%. In this one-day time period, Bitcoin fell about 10%, and he said that Bitcoin was getting liquidated. Number one, that's not possible because Bitcoin itself does not have debt, because Bitcoin is not a fraudulent system, because Bitcoin solves the Byzantine generals problem, and Bitcoin is a perfectly sound system. Okay, and he says that it is just another asset class. It's just a risk asset class, right? And unfortunately, this is what I think most people are going to fail to understand. Right now, Bitcoin is viewed as a high-risk investment, a high-risk asset class because it's so volatile. However, when governments understand this, that volatility is life, and they need volatility to solve this debt-to-equity problem, when governments realize that, and then they force that volatility up to bail themselves out, all of a sudden, volatility does not become the high-risk play. It becomes the low-risk play, right? If you're the US government, what is easier for you to do? Pump the real estate market up by a factor of 3x, or to pump Bitcoin up by a factor of 300x? I'll tell you which is easier, Bitcoin. It is much easier for you to just print more money to force Bitcoin price up by a factor of 300 than it is for you to print a bunch of money and force the price of housing up. We tried it in 2007. It didn't work so well. Ben Bernanke, Alan Greenspan, it's lit like This isn't theoretical. Like, it's literally what we tried to do. If this was Federal Reserve policy, okay, this is what was described, okay, after the dot-com bust in 2000. This was literally what Greenspan and Bernanke were outspokenly trying to do. They said, we had a bubble and the dot-com burst. It bursted, it broke, right? The market fell. We had to intervene. What can we do now to save the market and to pump things up? Oh, let's pump the real estate. Okay, this is the 2008 Great Financial Crisis, is literally what I'm describing. Let's pump up this asset to help this ratio here, to help America's economy in the private sector as well as especially in the public sector, right? But again, why didn't it work? Because you can always print more real estate. You can always build more real estate. Granted, it takes some time, and granted, it might take a few years, so you can keep the bubble going for a few years, but eventually at some point it's going to break. But the difference with Bitcoin is that it doesn't break, okay? The real estate bubble has been dwarfed by this Bitcoin bubble, quote unquote. We went from 6 cents to 60 cents to $6 to $60 to $600, $6,000. Now $60,000 and $600,000 is on the table. And I think probably pretty soon we could be having a real conversation that maybe $6 million is not nearly as far down the line as some people currently are thinking. And then eventually at some point you get to actually exciting numbers like tens of millions of dollars per Bitcoin. Okay, I know that might sound crazy now. In nominal terms, that's nowhere near crazy. But even in real terms, I think people are radically underestimating the value of an honest weight and measure for the world. People are underestimating the value of that kind of honest system priced in terms of lies, right? The S&P 500 goes up forever in the currency of lies, which is a proof of war political currency. It is a currency that is printed out of thin air by a monetary god that says, let me create light, let me create energy by my fiat, by my decree, by my authority onto other human beings. Well, I do not believe that's right. I don't think it's right for one person to say they have the moral authority over another person to say this magical piece of paper is going to be exchangeable and worth your human labor, your human time, right? I just don't think that's how the world works, right? So when you have energy priced in terms of lies, the value of it goes up forever. But when you have energy priced in terms of truth, it trends down forever. Why? Because we're always building more houses. We're always growing more food. We're always mining more gold. We're always going to be printing more stuff. The S&P 500, America's 500 biggest public listed corporations, are going up forever in terms of the US dollar, and they are going down forever in terms of Bitcoin, right? And this is why the US government cannot just start printing money to fill this hole like it did with real estate, with the stock market. It simply cannot work. It cannot be sustainable forever. But if you're able to do it with Bitcoin, it is possible because unlike stocks, you can't issue more shares, right? And this is why Michael Saylor and others are brilliant for taking advantage of the discrepancy and information gap in the markets by exploiting what they're failing to understand. You can print more stock, and if you take that printed stock and you buy something that can't be printed, all of a sudden you increase the value of that stock even though you've just diluted it, right? Again, think about it. What is Michael Saylor doing? He is doing every best possible move he can to hyperinflate his own stock. He's printing and printing and printing, quote unquote, printing and diluting more shares. He's dumping as many shares onto the market as he possibly can. He is dumping shares. He's the chairman of the former CEO of MicroStrategy. The current CEO is dumping shares, right? They're all dumping shares. Why? To buy more Bitcoin, raise more money to buy more Bitcoin, right? They're doing everything possible to print more, right? Don't you think the US government at some point is going to realize, hey, wait, you're telling me this is a cheat code that we can print as much as we want? We can just keep printing our own paper? And actually, because we're taking this paper we created out of thin air and acquiring something we can't print, that means that we can keep printing for longer? Ooh, that's really interesting, right? And so am I advocating for fiat money? No, absolutely not. I'm just saying this is inevitable game theory. Do I think it's right? Do I think it's moral for politicians to be printing money and distributing it onto the masses? No, I don't think it's great. I don't want it. But I would much rather see the US government do this than to go on our current path, because these are our two paths. One path is that we just keep printing money, paper for other forms of paper, and we force the nominal prices of those paper up, and then we tax the unrealized capital gains of those paper. So then we're harvesting paper from the paper that we printed to prop up the other paper, and we're using that paper to pay off the paper. Like, you begin to realize why price controls do not work, okay? The Roman Empire collapsed. When it collapsed, it had price controls, right? When Venezuela collapsed, it had price controls, right? Price controls, taxing unrealized capital gains, right? Massive income taxes, massive wealth taxes. These things don't work. because you're backing paper with paper, and ultimately you're backing all the paper with the barrel of a gun. And if people stop trusting the paper, the guns have to come out and defend the paper, and you will submit to the state to give us your real world wealth, right? If you can't pay us the paper and you default, you better give us your stuff, right? And this is unfortunately why these things trend towards tyranny, why they trend towards misinformation, why they trend towards propaganda, and why they trend towards communism and collapse, right? The other option is take the paper and convert it to an actual real world commodity that takes energy to produce. Bitcoin is just a number, it's just made up, but it takes electrons to produce. It takes energy to produce. It takes mass and it takes time to produce. Okay, you can't make Bitcoins out of thin air like you can make stock or like you can make paper out of thin air, right? And so my point is, I would much rather see a United States of America 20 years from now that is printing tens of trillions of dollars every few years to buy more Bitcoin. I would much rather see that future world than a future America that's printing hundreds of trillions of dollars to fund more guns to defend that currency. I would much rather see a World War III, an orange World War III, where the nations of the world are competing with each other, printing as much money as possible to accelerate construction and expansion of their electric grids as fast as possible. I'd much rather see that kind of world war, world competition, a new arms race for Bitcoin. I'd much rather see that world instead of a different world of competing for who has the biggest guns, who has the biggest weapons, and who has the most political might over another nation. I firmly believe those are the two paths ahead of us. We are trending towards war, one or the other way. We are trending towards competition is probably a less violent way of saying it. We are trending towards some great reset. We are trending towards some great redistribution of power and resources. The United States of America, since 1944, with the Bretton Woods Agreement, has been siphoning wealth away from the rest of the world towards ourselves by printing currency and dumping it onto the rest of the world. We would like your oil, and you're going to take our paper for it. And if you don't take our paper for it, we will point guns at you until you give us your oil for the paper that we give to you out of thin air. Okay, Mexico, Latin America, South America, China. Okay, we want your labor. We want your labor cheap, or we're going to give you our paper for your labor. And if you don't like it, we're going to have an economic sanction on you. You don't like the economic sanction? Well, the guns will defend the economic sanction, and we'll do it for whatever reason we make up, right? This is exactly what we've done to South America, to Africa, to Europe, to Asia. This is what we've done to the entirety of the world. And this has compounded. This has built up for decades now, almost a century now, multiple generations, multiple working lifetimes. This has been built up. And so one way or the other, these weights and scales that have been distorted to the United States of America unfairly in our advantage for the better part of a century have to come home to roost. The chickens have to come home to roost. And these are the only two paths, in my personal opinion, that we could possibly go on. Path one is global war, where we fight for different pieces of paper that are defended by different guns, and ultimately the biggest guns wins. And the other scenario is that of some sort of new commodity, some sort of new principle, as Nikola Tesla described it in 1899, that doesn't require guns to enforce its energy, to enforce its value, or enforce its supply, some other kind of way that we could project power and constrain and save our own energy, our own power, that we don't have to exert it onto others or to kill others for it, right? And actually, this whole, this is actually very, very related to the entire reason that Kennedy dropped out. I watched portions of Kennedy's speech where he was conceding the election. Basically, he's conceding to Trump, right? That's essentially what he's doing here. And Kennedy talked about in his speech how he was saddened in his heart, and he actually seemed quite emotional in his speech about that he was dropping out and siding with Trump, right? This is the exact reason why politics does not work. This is the exact reason why politicians do not work, right? Because bigger gun diplomacy wins. Bigger politician diplomacy wins. Why could Kennedy not continue his campaign? Because he realized it was in his own self-interest to give up his own campaign that he has worked so hard for and instead side with Trump. Because, like, Kennedy literally said this in his speech. Kennedy said that he believed he had a higher probability of having an influence on the future of America's children, the future of America's healthcare or whatever, if he sided with Trump instead of being on his own, right? If you have a hive with honey, this isn't honey, this is water, but imagine it's honey for the sake of example. If this is honey, it's an analog acid. If you have 3 different bee politicians all trying to convince the other bees which bee they should support when going to war, when going to swarm with each other over who gets to control the honey, okay, it's inevitable that the weakest bee of the 3 inherently has to side with one of the other bees. This is just exactly what we see in game theory. This is exactly what we see in countless historical examples. Look at any major war, right? Look at World War II, World War I, the 7 Years' War, the 30 Years' War, Napoleonic Wars. You can go back and back and back throughout the entirety of human history, and you see this exact same game theory playing out again and again and again. Okay, the weaker politicians, the weaker armies, the weaker generals, the weaker warlords, the weaker emperors always have to congregate and eventually heed support to the strongest one between them, because it is in their own best interest in surviving to join with them instead of to fight on their own, right? And so this entire capitulation from the Kennedy campaign towards the Trump campaign, I think, was the correct strategic move to make for Kennedy, because obviously the incentives are in his favor, as I just described. But this is the whole point. This is what Bitcoin solves. Bitcoin doesn't rely on politics. Bitcoin doesn't rely on that kind of game theory of projecting power in the analog world, but instead having it in the digital world, right? And so as I wrap up this video here, that's gone way longer than I thought it would be. Ultimately, why is this exciting to me? Because I think the probability of Bitcoin Trojan horsing, excuse me. Give me a second to drink some water. Whoops, I lost my cap. The ability of the U.S., or excuse me, the probability of the U.S. government becoming Trojan pilled in this aspect, I think, has gone up. Am I blindly saying, oh, this fixes everything? No, I'm not saying that. Am I blindly saying politicians are going to fix everything and Bitcoin utopia? They all understand Bitcoin perfectly. They're never going to issue token scams. They're always going to be trustworthy. No, absolutely not. I'm not idolizing them at all. Okay, I think both Kennedy and, in my opinion, especially Harris, are all guilty of very, very horrid and disgusting things. But ultimately, the point is, I want Bitcoin to Trojan horse the people in charge of the guns. That's the whole point, right? And this is why I talk about Bitcoin so much. This is why I make these videos. This is why I appreciate it when you like and subscribe and share these videos with others. Why? It's because I dedicate so much of my life to this concept. I dedicate so much of my life to accelerating Bitcoin adoption and helping people understand that the collapse of fiat currency is not the collapse of the world, but the collapse of fiat currency doesn't have to be the collapse of the world. It could be the collapse into a new and better system, right? And that's why I literally say I will die on this proverbial orange hill, right? Because I believe if we fail to hold this ground, where we can settle energy disputes around the world non-violently with electricity. Instead, this digital war, if it fails and power breaches the gates of this orange castle, it will spill over into kinetic war, and ultimately it will probably claim our lives, and if not our lives, it will probably claim our children's life, right? So what do I have to use? Bitcoin. What do I have to lose? Bitcoin is this kind of digital fortress we have, our best chance of settling these energy disputes and having these disagreements between countries settled on a neutral orange chessboard instead of resorting to violence and settling the discrepancies with guns, right? And so likewise, would I die for gospel? Would I die for Jesus Christ? Yes, absolutely. And that's why I enjoy and love making these videos, right? I would absolutely die for Bitcoin because ultimately I believe that this is war, right? If you are in Bitcoin, if you're buying Bitcoin, if you're holding Bitcoin, if you're accelerating Bitcoin, this is war. You are fighting, in my opinion, you are fighting World War III 20 years before it's actually begun, right? And granted, you're fighting it remotely, right? I'm in a comfortable, luxurious home here, right? I have clean water, right? I'm not in some trench in World War I getting eaten up by maggots and mice and watching my comrades die by me, right? Like, okay, this is war. Obviously, I'm not trying to make light of it. I'm just saying that I literally believe those are the stakes. That accelerating Bitcoin is lowering the probability of war. Maybe we fail that mission. Maybe there still are major wars within our lifetimes in the next couple decades here. But everything I can do to lower that probability, I will fiercely advocate for. I will continue to advocate for, and I'll continue putting out work for, right? And this is the exciting thing to me, is that all of this work is God's, all of the Bitcoin are God's, and the goal, and my personal goal, is to love other human beings and serve those human beings in His name. And the most loving thing I know to do for my fellow brothers and sisters of America and of the world is to accelerate game theory and accelerate an idea that is going to decrease the probability of kinetic violence and conflict and power projection, and instead accelerate the incentive towards nonviolent power projection, which I personally believe as Bitcoin. So what else do I have to say? Oh yeah, this. So this is the other thing that I think people are missing, is that, so 60 million, right? Why 60 million? Because we're at 60,000. That's just a nice even number, right? I made it up. Yeah, sure. But we've gone from 6 cents up to 60,000. That's a price increase of 100,000 going from 60,000 to 60 million is a price increase of what? 1,000? So literally Bitcoin going from 60,000 to 60 million is 1% of the returns it's done in the past. I'm probably doing that math wrong in my head, but my point is that from a historical perspective, Bitcoin could definitely go up. It could significantly go up, right? And how do we price that? Like how do we price this, right? Clearly gold doesn't work. Clearly real estate doesn't work. So if Bitcoin does work, if Bitcoin doesn't fail, should it be as valuable as gold? Should it be as valuable as real estate? No, probably should be much more. Bitcoin is way more than gold or real estate could ever be, right? And so I'm personally bullish on Bitcoin way more than that of comparing it to the gold market cap, right? Obviously, the gold market cap is a major milestone we will make at some point, but I think it's going to be much, much higher, right? Because the people that say that they're bullish on Bitcoin price and it's eventually going to compete with gold and the market caps are going to stabilize about next to each other, right? Oh, people in the future will be 50% invested in gold, 50% invested in Bitcoin, blah, 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 whatever. I think it's pretty equivalent to saying to someone, 100 years ago or 50 years ago or 20 years ago, whatever, is saying, I'm bullish on the internet and the computer, and I think it's going to compete with the telegraph, and computers and the internet are eventually going to stabilize the same market cap to that of the telegraph, right? I think it's a very comparable example, right? Very few people actually used the telegraph. The telegraph was expensive. Telegraph was a really big deal and a very big deal for a very long time. It was the dominant form of international communication for the entirety beginning of the Industrial Revolution, right? For thousands of years, we didn't have the telegraph. The telegraph was unusable because we didn't have or understand electricity to use the telegraph with, right? For thousands of years before the Industrial Revolution, the telegraph was worthless. Then, for the majority, 50 years ago, the majority of the time in the Industrial Revolution was the telegraph being dominant. And then the phone took over, and now, of course, we have the computer and the internet, dear viewer, at which you're watching, right? This presentation, this ramble I'm giving at this point would not have been possible with the telegraph, right? How do you price the internet in terms of telegraph, right? Is it comparable to say that the market cap of all the telegraphs in the world is going to be about equivalent to all of the internets and websites and computers and social medias and YouTube videos? Like, they're not comparable. One is worth many, many, many orders of magnitude higher than the other one, right? And I think it's the same thing with Bitcoin or gold. For thousands of years before gold, we did not have a need for gold because we didn't have enough money, enough energy to mine the gold and use the gold, right? Food, salt, wheat, those were the things we used before gold. And then akin to my Industrial Revolution example before with the telegraph is the same thing with gold. For the majority of time in this agricultural revolution for the last, few thousand years, we have been using gold. And now we are exiting the telegraph era, entering the internet era. We are exiting the gold era, entering the Bitcoin era, right? And so in the same way that in the future, people will look back at us today and say, oh my goodness, how are people pessimistic on Bitcoin? Clearly, not everybody could possibly use the telegraph. The telegraph could not scale. The telegraph had technological limitations. Okay, you can have tens of millions of people, maybe eventually at some point use the telegraph, but you can have tens of billions of people use the internet, right? Why were people selling the internet to buy gold? It doesn't make any, or excuse me, why were people selling the internet to buy the telegraph? It doesn't make any sense, right? I think it's the same thing with Bitcoin. Millions of people, maybe tens of millions of people can use gold, but gold is analog, gold is cumbersome. You can't do things with gold that you could do with other assets. You can make more gold, right? There's gold in the air, technically. There's gold in salt water and in the oceans, right? There's gold in the ground. There's gold in space. There's gold everywhere in the universe. And theoretically, as we just channel more and more and more energy on a long enough timeline, we're just going to make more gold, right? Gold has these failures, these constraints. But Bitcoin, okay, you don't have to be limited to 10 million people using gold. You can have tens of billions of people using Bitcoin. You can program Bitcoin. You can time lock Bitcoin. You can do all sorts of things with Bitcoin. You can't possibly do with gold, right? So my point is, all these things I'm describing, Kennedy and Trump unifying, the possibility of the government issuing these principal protected notes and convertible debt notes to accelerate their own demand for bonds in this very difficult time we're entering, where demand for bonds is collapsing and their only options are yield curve control and taxing unrealized capital gains versus just pumping Bitcoin up, right? In that coming world, I don't think it's reasonable to say that Bitcoin is going to stabilize at $600,000 a coin. Okay, that's about a 10x in price from here. That would mean that if you buy $100,000 worth of Bitcoin now, it's going to go up to $1 million. I don't think that's reasonable because number one, the price of gold is going up forever in terms of political currency, right? Like that chart I showed before, the US stock market versus and priced in Bitcoin versus priced in dollars, right? Like probably by the time Bitcoin market cap becomes equivalent to that of gold, the price of gold and the market cap of gold is probably going to be significantly higher than what it is now, right? A 50% move in the price of gold is not unreasonable. I think it's very reasonable, right? It's entirely possible that by the time Bitcoin's market cap reaches that of gold, it's about $600,000, that actually the target we're reaching for is $900,000 per Bitcoin, right? Like we could literally be 90% of the way to a $1 million Bitcoin price, and we still have not surpassed the market cap of gold. That's entirely possible in nominal terms. I really believe that, right? And here's the other crazy thing to think about is that there's maybe only 1 million people on the planet today using Bitcoin to the degree that myself and probably you watching, or many of you watching are using it. Okay, there's 8 billion human beings on the planet. Okay, 1 million, 8 billion, that's literally an 8,000x in potential adoption. Now, does that mean that Bitcoin price will increase by a factor of 8,000? I don't know. Maybe it means more. Maybe it means less, right? Metcalfe's law would imply it's going to be significantly more than 8,000, right? You know, laws of diminishing returns suggest it could be significantly less. I don't know. I don't care because an 8x is good enough for me, let alone an 80x or an 800x, right? An 8,000x is just crazy, right? For context, real quick, an 8,000x on 60,000 is a $480 million Bitcoin. Now, am I predicting a $480 million Bitcoin? No, let's not get ahead of ourselves too much, right? I guess in a long enough time horizon you can predict it, right? But my point is, whichever way you look at it, as long as you're in Bitcoin for that mission of lowering the probability to kinetic war, lowering the probability to violence, and therefore understanding the importance and significance of the unification of a Trump-Kennedy ticket, increasing the probability of pro-Bitcoin politicians sitting at the table, at the cabinet, right? You've got a dozen or so cabinet members, the president and the vice president. Okay, we're talking about the small room of 15 to 20 top American thinkers and board members, cabinet members. Okay, what if you have multiple people in that room that want America to buy millions of Bitcoin, right? Even if they don't fully understand it, even if whatever, right? Again, we're talking in probabilities. We have a probability of war, probability of Bitcoin. This unification of the ticket is increasing the probability that Bitcoin succeeds, and therefore increasing the probability we could have a significant increase in Bitcoin market cap, right? I do not believe it's reasonable for Bitcoin market cap to only be 2 or 3 or 5 times more valuable than gold when it's actually 100 times more useful or valuable, right? We're talking about millions, if not tens of millions of dollars per Bitcoin in today's dollars, not before inflation, not before hyperinflation, right? If you think I'm crazy, I refer you back to Hal Finney. Hal Finney in 2009 gave a prediction of a $10 million Bitcoin. This was just a few days after he first heard about Bitcoin, right? If Hal Finney, after a couple days, was predicting a $10 million Bitcoin, which adjusted for inflation now at the time of recording is $27 million, right? Why is $60 million unreasonable, right? Really, have we only learned so little in the last 16 years that we're only twice as bullish on Bitcoin as Hal Finney was? I think in reality, we should be much, much, much more bullish on Bitcoin than even Hal Finney was, because we have 16 years of evidence and time-proven theory and support that this thing actually is going to survive, right? So that's my personal opinion. I am not saying it's going to happen anytime soon. I'm not saying they're going to get, Trump and Kennedy are going to get elected and suddenly we're going to have this magic utopia and Bitcoin's going to the moon and, world peace, blah, blah, blah. But I am saying in probabilities, I think probabilities are good that these things are going to accelerate, right? And so when you own Bitcoin, you're not exposing yourself to a given political currency system, right? America, right? We're talking mostly about America here. What's the most famous city from America in the world? New York City, obviously. Okay, Manhattan, right? Manhattan was really first settled not by the British, but by the Dutch, right? It was New Amsterdam before it was New York, right? That's so far in the past. It's so distant in the past. Most Americans don't even know that, right? We are so early to Bitcoin that we are still in an empire beforehand, right? See, this is the crazy thing, okay? So the Dutch got to New York, well, at the time, New Amsterdam, 1609, I believe. So how early are we to Bitcoin? Well, if we actually want to do population analytics, like on a per capita basis, my best estimate based on the historical data of how many people were living in New Amsterdam at the time is that we're about in the 1630s, right? That's about how early we are to Bitcoin, right? New York City's current population is 8 million. The world's Total population today is 8 billion. Basically, you just divide the population statistics by 1,000 and you get it about right. And so when there were about 10 to 20,000 people in New Amsterdam, aka New York City today, was about the 1620s, 1630s or so, right? And so that's my point. How early are you to Bitcoin? It's akin to saying you're so early to New York City that it's the 1630s, the Dutch still rule the seas, you're still called New Amsterdam, not New York. That's how early you are. And that's why it's so important to take your Bitcoin seriously and to take your Bitcoin custody seriously. And so to finish up this video, I've been talking a lot about risk, a lot about probabilities, a lot about problems, right? I have talked to 20 or 30 people this week about increasing their Bitcoin custody, Bitcoin security, and I've talked to a lot of people about the risks with their Bitcoin. You have tangible risks and you have intangible risks. Intangible risks are things that are hard for us to conceive of. They're things that we forget about. They're things that we are just unknown unknowns. They're things that are very hard for us to price in. Okay, I work at the Bitcoin Advisor, and at the Bitcoin Advisor, we charge 0.5% for our services. What do we provide? What are those services actually we provide? We provide multi-sig vaults, key agent arrangements, Roth IRAs, irrevocable trusts, super managed super funds. We give tax advice. We give all kinds of legal advice, right? Basically, we help people buy more Bitcoin and secure that Bitcoin properly to lower as many intangible risks as possible. And the reason I say that is because on the news of this Trump and Kennedy unification, the price of Bitcoin has shot up. It's up over 5% in the last 24 hours or so. And multiple people in the last week or so, unfortunately, are people that are yet to buy Bitcoin. People that are debating whether they should buy Bitcoin or not, and they were debating whether to hire me or not. And multiple of them told me, "Oh, Luke, 0.5%. You're so expensive. Luke, why are you so expensive? 0.5% fee to help me manage my Bitcoin self-custody, to help me manage my UTXOs, help me manage my coins, to make sure my kids get my coins in case I die, right? 0.5%. Luke, you're so expensive." And I explained to them, 0.5% is a tangible cost, and you're going to have to accept that tangible cost if you want my service. But ultimately, there are intangible costs, opportunity costs, right? You might delay buying Bitcoin because you're concerned about the volatility, because that's a tangible cost. You might be putting off and procrastinating your Bitcoin self-custody because you think it's a tangible cost to buy a hardware wallet, or because you think it's a tangible cost to hire somebody like myself, right? Whatever your specific tangible cost in life is, or in your specific circumstance, tangible costs can be scary and they can be hurdles. But ultimately, if you aren't also evaluating the intangible risk of procrastinating on those decisions, you're going to make mistakes, right? And the United States of America is the same way. There's a very real tangible cost to adopting a Bitcoin standard. MicroStrategy had the same thing. There's a very tangible cost and risk, a reputational risk to taking that. But the intangible benefit that Michael Saylor, MicroStrategy have absorbed in the last 4 years has been tremendous, right? And so this is the thing I try to explain to people, right? When people hire me, they're paying 0.5% annually, but my personal historical average is that my average client increases their Bitcoin stack by 51.2% within the first 12 months. That is a massive increase in an intangible value benefit to them for a small fixed tangible cost, while at the same time decreasing the negative externalities and downsides of it, right? By joining Bitcoin Advisor, you can email me, the link's in the description, you can contact me, whatever. The reason I say these things, yes, obviously it's in my interest because I get paid a portion of that fixed tangible cost, but ultimately I care about you and I want you holding Bitcoin in this new Amsterdam era of New York City, where you're so early that the first two-story building is yet to be built, right? That's how early you are to New York City. It's not even named New York City, right? That's how early you are to Bitcoin, that the name Bitcoin might not even last in the future, right? Literally, that's how early you are. And my point is, if you are going to be early, you have to understand that for that tangible benefit of being this exceedingly early to Bitcoin, you have to accept that there is an exceedingly high risk you're going to lose that Bitcoin, right? If you have 5 Bitcoin, you have about 1/4 millionth of all the money in the world. Okay, what's the probability somebody in a few years is going to sue you just for no reason in hopes that they can take your Bitcoin? After all, they know you have it all on Coinbase, right? Like, what are you doing? You own 4 Bitcoin and you're not taking your self-custody seriously, right? If you have 21 Bitcoin, you own 1 millionth of all the Bitcoin in the world, right? What's the probability that when you pass on, that if you don't have a proper estate plan, if you don't have proper inheritance planning, proper a setup with your attorneys and everything, like if you don't have that set up, what's the probability that it's going to get siphoned away to divorces and fees and all kinds of sorts of things when you pass, right? If you have one Bitcoin, what's the probability you're going to lose the keys, right? What's the probability somebody's going to steal your seed phrase in your house? What's the probability that your house is going to burn down and you're going to lose your seed phrase, right? What's the probability of this? What's the probability of that? Are you UTXOs managed, right? All of those things. There are dozens of different kinds of intangible risks to your Bitcoin. And my message here, my closing message here is that please take those risks seriously. Quantify them in your own head. What is the probability that in any given year, this ETF product that I'm holding the Bitcoin in is going to take it, right? Oh, I own Bitcoin ETF in my retirement fund, right? Well, okay, if your time horizon is 40 years, yeah, the ETF might be safe for 1 year or 5 years, but what's the rate of risk? Let's say there's a 1% chance in every given year that the United States is going to 6102, that ETF. Well, in 1 year, the odds are in your favor, but give it 40 years, and all of a sudden, you're talking about a significant probability that the ETF is going to be confiscated, right? And so, what's cheaper? What's cheaper for you, right? Taking a fixed tangible downside cost of 0.5% a year in exchange for a, on average, intangible benefit of over 50% in the first year, or to do it on your own, put in the time on your own, figure out the tax question on your own, figure out the legal questions on your own, the self-custody questions on your own, the configuration file questions on your own, the UTXO questions on your own, right? Which is the better value add to you? And maybe you want to diversify a little bit of each, right? So again, if you want to learn more about that, if you want to reach out to me, please link in the description below. It is a bit frustrating to me personally, because like I said, I've talked to a lot of people this week about this. Many people literally just mere days ago were saying, oh, Luke, at 0.5%, you're too expensive. But now that Bitcoin's up 5% in a day, they're reaching out to me and saying, oh my gosh, Luke, I regret we should have done this a week ago or 2 weeks ago, whenever I first talked to them, right? Because they're like, crap, that was 10 years of service of intangible. I had an intangible. I was so worried about paying a small fee over the course of 10 years that now I've had an intangible expense, an intangible risk that has now been realized by Bitcoin price going up, right? And so that's my encouragement. Wherever you are in your Bitcoin journey, whatever you're trying to do, please get off zero, get some Bitcoin, and understand there are tangible risks like Bitcoin volatility, and there are intangible risks like all the other assets in the world being demonetized against Bitcoin and trending to zero forever. And this unification of the Trump and Kennedy ticket means that I think the probability, this intangible probability, has significantly shifted in favor of Bitcoin and in favor of Bitcoin price appreciation. I think Bitcoin price is going to skyrocket at some point in the next few years. Maybe we're talking about a 600,000, maybe we're talking about a $60 million Bitcoin. I don't know. I don't care ultimately because I'm in this for the long term. But whatever the case, the Bitcoin you hold in your mind, you should view it as if every Bitcoin is worth $60 million. And you got to ask yourself, am I protecting it properly? What are the odds that the value of land in Manhattan is going to appreciate faster than my ability to defend that land? That's the question you should be asking. I make these videos to get you excited about Bitcoin, Bitcoin's future, help you understand that Bitcoin's not just about number go up, but about freedom go up, humanity go up, and helping as many people as possible and lowering the probability of violence in the future. That's what it's all about. And so ultimately, the question for you is, are you going to keep your Bitcoin? You've understood Manhattan. You understood New York. You understood the internet, and you understood why it was better than the telegraph. But if you lose it all in the process because of some stupid lawsuit or some stupid self-custody mistake or some stupid unrealized capital gain tax because you didn't have your Bitcoin in some proper trust or inheritance plan, right? I mean, like, what's the point? Most of us, and this is the brutal truth, I'll end on, this is the irony. People join Bitcoin because they wonder if they're too late. Then once you're in Bitcoin long enough, like you and I are having this conversation, or not conversation, but you've made it to the end of the video, right? You understand you're not too late to Bitcoin. And it's actually the inverse. You are so early to Bitcoin, you're still in New Amsterdam, which means the probability that you're going to lose your coins or a significant amount of your coins is probably exceedingly high. So please take it seriously. You're early to Bitcoin. This news is exciting. Congratulations to Kennedy and Trump on basically increasing the probability of winning this election. I think it's a really big deal for their campaigns. But ultimately for you, what it means for you, you got to do what's in your own self-interest and your own self-preservation. So if you want to hire me, the link's in the description below. Pay 0.5%, and you get 51.2% on average more Bitcoin within the first year. If you don't want it, no problem. If you want to hold on to fiat forever, no problem. I'm not here to convert all of you. I'm just here to make the answers known, or make my opinions known. And those that figure out will figure it out. And those that don't, I wish you all the best. So thank you, everyone, for your time. This was a bit of a longer rant, but I think this was really big news. And we'll see where we go from here as we transition from this ancient world of New Amsterdam into the future world of New York City.